This is The Sound of Small Business, brought to you by RBC Royal Bank. I'm JP Davidson, and these are the inspiring stories and hard-earned lessons of successful Canadian entrepreneurs. The RBC Small Business Panel Series features business owners and experts sharing their experiences and providing advice to entrepreneurs across Canada. In this episode, we'll discuss small business growth strategy. Our panel will give you their take on strategic planning, common mistakes entrepreneurs make when it comes to growth, and how smart risks can help grow a business. We'll be hearing from Becca Perrin, co-founder and co-CEO of Pear, a line of modern home accessories, Cam Heaps, co-founder of Steam Whistle Brewing, and Candace Enman, president of Welch Group Consulting. To start, here's panel moderator and Senior Director of Client and Business Strategy for Small Business at RBC, Karen Svensson.
Before we started, we had an interesting conversation about the strategic plan, which is also a critical role for both of you as leaders of your business. Any tips and insights on the strategic planning role?
Yeah, I mean, the plan is the single most important thing because you have the plan even before you put the people in place to execute. So your plan is everything. And that plan will change with time, with changes in the company, changes in the industry, changes with consumer demand. And you should have, I mean, we always pride ourselves on having a 50-year plan as well as a
5-0.
Yes, 5-0, as well as a 1 and 5, because we're not building a business to sell. We're building a legacy brand in the beer business, a beer that Canadians can be proud of. So if there's anything required on a day-to-day basis that needs to be adjusted to get the company or a certain department or an individual driving towards that plan, that is as high a priority item as you could possibly spend time on.
This is something that resonates strongly with us at our company, which is that there is the what that we have, which is our product, which is the product that we design and love. Then there's the how we do it and how we make it and how we get it to people and how we sell it. And then there's the why we do it. And the why we do it is really what drives our overall strategy, why we're here, why we are here today, and why we're going to be here in 50 years. So the why is really what drives all of it. And it really leads the strategic decisions that we have on an annual basis. If you're clear on that, like why you're in existence as a company and what it is, what is the essence of why you all go into work every day, then that really does drive all of those high-level, important, strategic, long-term decisions. Past this quarter, past this financial year, it's with the view to be growing the business for the reason that you started in the first place. So I think having that very clear in your minds, in your team's minds, and having that be the guiding light for your strategic initiatives is really, really important.
There's a great saying that says, you know, if you don't have a strong plan, everything seems like a good opportunity. And it's so true because a good plan really just makes day-to-day decision-making simple, easy, and efficient because everyone's going the same direction.
Right.
You can waste a lot of time on a day-to-day basis if you're not all going towards the same direction.
And if I can just add to that, I think what's also really important for building a brand and a business is to be true to what it is you are doing and not so influenced or guided by what the other beer companies are doing or what the AB brands are doing. It really doesn't actually matter, and it doesn't help you to grow. I mean, being so reactive and reactionary to what's happening is really dangerous, I think.
This is a very important point for any entrepreneurs listening, because a lot of people go, oh, well, how do you get into a market that, it's saturated? Well, every market is saturated. It's 2017, people. You know, unless you've got some fancy new tech thing, everything's saturated. From baby products to beer, all you have to do is be better than someone else in that market. You're going to get market share. So I couldn't agree more with Becca saying, you know, we've never really dwelled and focused on what the competition's doing or trying to buy competitive data sets which are available for sale. Believe in your strategy and plan and execute.
It's just important what you do as what you don't do.
Yeah.
Right?
Yeah.
That distraction factor. Candace, does that resonate in terms of the clients you work with?
It absolutely does. And I was just going to say, I mean, your strategy is really that guiding light that keeps everyone focused and going in the same direction, right? It's to ensure that everyone in your company understands what your vision is and that everyone is aligned to that vision. So that's what your strategy does. It keeps you as owners focused on the big picture So not necessarily down into the weeds of running the business on a daily basis, but actually, keeping yourselves accountable to saying, this is where I want the business to be. I want my business to be here 50 years from now. So what do I need to do to ensure that that's going to happen? And what does that look like? And that's what your strategy is really about.
What are some of the common mistakes you think that people make as they're looking to grow and putting growth plans in place? Either things that you almost did but didn't, or things that you've seen from other businesses in terms of mistakes as people are trying to grow?
Brand proliferation is the number one killer I see of small business. I mean, it works for Procter & Gamble, but if you're a startup, man, the number of people I see who they come out with 300 products in their first 10 years, right, and they are nothing to nobody. When they wake up one morning, they started with a great passion and a great vision, and they let their temptation take them off. Well, they probably didn't have a plan. But we see that all the time.
I would probably say having a great idea is obviously the important part, but being able to market it and sell it and have it be competitive and having the price structure, your price structure, work to that pricing structure that works in the market is so key. So I think there can be a great idea, but not having the pricing model, the cost of the good versus what you're going to be able to sell it for, and having the right margins built in. When we started our company, we started the brand as a wholesale business. So our cost structure was built on that model. Mm-hmm. So we built in a profit margin that worked selling it to retailers. So we've then, in the last couple of years, added a retail component by selling it on our own website. And we're building our retail business, which is at double the margin. So rather than starting there and trying to work backwards, we tried to be very strategic and very careful that the pricing structure and the margins made sense, because the idea, as everyone knows, is just part of it, but it has to be economical and the profit has to be there and it has to be sustainable and growing. So I think that's a key part that people have to really have a very clear handle on from the cost of production before they start to enter the market and have a real positioning from a pricing structure.
Other thoughts from you, Candace, around those things that are common mistakes during that growth phase?
So I think because we work with a lot of owners that are focused on the sustainability and the transferability of their companies, I think one of the biggest mistakes that we see with business owners is that they are the do-it-all business owner. So we say that they have that octopus syndrome where they're doing everything. Mm-hmm. So they really haven't taken the opportunity to build their business, put the right infrastructure in place in their business so that it's not just reliant on them. So for us, we're always telling owners that they do have to, Stephen Covey, you think with the end in mind, right? So you build your business to last decades, but you always have to think about, how you're going to transition it eventually. And there's a myriad of options that are available, but that do-it-all business owner, that impedes your growth.
That's the guy or girl who wasn't good in group projects.
Yes.
They are very third-party help is the best model for them because their businesses will sputter.
But we have a lot of really successful business owners and clients that have great businesses. They're $20 million businesses, but they're still so heavily involved that if they weren't there, the company wouldn't operate the same way. So it's really kind of stepping back and trying to figure out what do you need to put in place in the business in order to allow that growth so that the business is not just relying on you. Mm-hmm. So we have clients, again, that have built successful businesses. They're riding the high. They're, selling lots of product, but it's all them. So now you have to kind of step back and say, and some clients hate this, but you have to almost make your company more corporate, right? And there's things that you have to follow, but that will ensure that you're able to manage that growth more successfully.
Great tips. Thank you. So let's dig a little bit deeper in sort of growth and sort of the ebbs and flows of growth. Let's go to when you're growing really quickly. You're growing really quickly. You both have businesses that have inventory attached to them. So how do you handle those spikes in inventory, the pressures it puts on, whether it's staff, your business, your finances, any sort of insights on how you worked through that demand curve going up so sharply?
Every business is a little bit different depending on the sales cycle of the product and also whether it's spoils, where we are essentially
Yeah.
food products. So because it spoils, you're trying to predict your sales 6 weeks from now, because that's about how long it takes to make a good batch of beer. So, and if you miss it on the wrong side, then you have a stock out. If you miss it on the other wrong side, then you're going to have to dump product after a few months. So really looking at year over year data and following, growth trends to help you try and predict is how we do it.
Watching the numbers.
Yeah.
We are more fortunate in that our product does not spoil, and we are largely baby and kids, which is seasonless and timeless. And some of our best-selling SKUs and prints and products have been around since the very beginning. So we're fortunate in that sense that there's not a seasonality to it that's very hard and fast. But on the flip side, we manufacture in India, so we have long production and shipping lead times. So we have to factor that in to our forecasting. And that, coupled with unexpected growth and purchase orders from new customers, big new customers that we maybe didn't anticipate, can cause some challenges. We are erring on the side of, I want more than less. I don't ever want to have a situation where we're missing a sale because we don't have the inventory. We've got great turning product, but we will err on the side of caution and having a little bit more, because the downside of missing that sale is not someplace that we want to be.
No one likes to miss a sale.
No, absolutely.
Yeah.
Candace, two very different businesses, but
Yeah,
wonder if there's other insights from the business owners you work with in terms of managing that growth and having that inventory ready.
Yeah. Well, I think you guys really have hit the nail on the head when you're talking about data. There's so much data available now to businesses, right? Really knowing what your lead time is and what your peak demand periods are. And then you had also mentioned having a plan. And I think it really comes back to a plan. And that's what we see. So when we're talking to our clients and they're looking at, how am I going to manage this growth period? It's really about knowing that you have backup suppliers or producers, or, you have someone else to go to if you do have that spike in your sales cycle. So how are you going to fill that? We ask them to take a look at their human capital again, right? So do they have access to labor pool on a very short notice? So again, it's putting in a plan well in advance of the sales spiking. A plan and then a backup plan.
Right. So let's follow the cycle through a little bit.
Yeah.
And so you've had the surge in business. How do you balance reinvesting in your business and all the different choices around where to reinvest in advertising and new product development, the different elements? How do you think through that to keep the engine of growth going?
For us, I'd say some of the biggest areas of growth and reinvestment is in new products and new categories, and reinvesting in the brand and the evolution of the brand. I mean, we're expanding into new categories all the time, and that's a really big driver for growth for us, is to continue to be the go-to brand, not just for bedding or for storage, but to have that whole holistic offering to our customers. So investing in new products and categories is key for us. We have been fortunate, I would say, for our company, for Pear. A lot of our marketing has come very organically and through social media. We are very fortunate in that we are riding that wave of social media in its ability to drive awareness of the brand and to translate into customers. So it's a huge, huge vehicle for marketing for us. And we have not invested much at all in the way of marketing. It's been much more organic and more driven from our social media platform. So that's another big way that companies invest. And I'd say we've been more on the former than the latter.
Yeah, I mean, most of our investment, just due to the nature of our business, is on the capital side. I mean, if we were going to grow 15, 20% next year, we need 15, 20% more capacity, which means that we need about $2.5 million worth of equipment. So that would be a much greater investment probably than the incremental increase in our sales and marketing budget to go get that 15 to 20%. So that's just the nature of our beer business.
So a couple of different strategies and thinking processes there around making reinvestment decisions. Any other thoughts or tips?
Yeah, I think what comes to mind is that investment decision is really a growth mindset for an owner, right? And I think it's important for owners to know that your business is in constant evolution. So if you're not reinvesting in your business and trying to keep up with the times, then there's a chance that your business might become obsolete. So having that investment mindset is really important. Where you put your money comes down to your plan again. Like what is your goal? So do you want to go into a new market? Do you want to launch a new product? Is it the capital, requirements of the business? But it's important to continually invest in the business. Take a look at all the new technology that's out there, right? Like it can change your business completely. Mm-hmm. So it's important to have that growth mindset and to know that investing in your business is an important payoff.
So looking back over the different phases of growth that both your businesses have experienced, any thoughts or things you could share with us around the greatest risk you took to create growth, and would you do it again?
We're actually sort of in that right now. We started our business in home accessories and decor, and we've expanded and really grew in the baby and children's world. And we made a very conscious decision several months ago to really expand upon that segment of our business because it really makes sense for the business, for us as a company, for our growth strategy. But it was also a decision that came with some risk because the portion of our business, which is really where we started the company, we were preparing to walk away from largely. And that's a big decision, and it's not something that we took lightly. But we really identified that while that is a very successful segment of the business, without a doubt, it didn't compare to the opportunities that were presenting itself on the other side of the business. And if we could all focus our energy and capital and attention and all of our resources into the part of the business that really presented the most opportunity and that were really aligned with where we wanted to go, that the opportunity was limitless. So it was a really conscious but scary decision to walk away from a part of the business consciously that is really where your roots are. And I think that we could have cobbled along and kept it going and kind of moved it along, but it would have been at the detriment of growing the business consciously and effectively. So it's a decision that we have only just recently made and we're in it. Would I make it again? Yes, because it feels like the right decision for the business, but it's a risk.
Well, I think the greatest risk any of us probably took is starting our own business. Once you're in it, you're in it. And I'd do it 100 times over. It's been the greatest experience of my life.
Quitting our jobs when I had a baby and 2 more is a risk, but it has been just the most incredible experience and continues to be. And we love what we do. So there's way more reward than the risk.
Candice, any thoughts from you? Some of that advice that you give to the clients you work with?
Without risk, there's no reward, right? And I think that's really important. So if you're not willing to take that gamble, then you're static. And I mentioned business evolution a little bit earlier on. So you don't want to sit there and wait for something to happen to your business. So you need to have those big audacious goals, and you need to be thinking about, what risk can I take? They have to be calculated risk. You're not going to go out and spend, all your cash flow on doing something new unless you've looked at that business plan and you've done the forecasting and it really makes sense. There's so much change today in all of the businesses, right? And there's so much disruption because of technology. Sometimes you need to be able to take that gamble and change things up in order to remain competitive.
The worst decision you can make is just not making one.
It's no decision.
So just do it. It's not going to sink us. I'm pretty sure that none of the decisions we've made, sure, we've made mistakes, but mistakes happen and we move on. We really don't actually dwell on them. And I'd rather just make a decision and do it and execute to it than just sit and wonder about it for 6 months.
And sometimes you take too long to make decisions and you go back and you second guess yourself, or, you're halfway down and you think you're on the right path, but you're already committed. So, you either see it through or reevaluate and pull yourself out. But that's all part of it. You need to be confident in the decisions that you're making at the end of the day.
This has been The Sound of Small Business, brought to you by RBC Royal Bank. For more advice and stories of small business success, subscribe to the podcast in iTunes or search for The Sound of Small Business wherever you find podcasts. Our next episode will focus on managing business growth. You can also visit rbc.com/buildingbusiness for advice and tips on how to start, manage, or grow your business. Thanks for listening. This podcast series is intended as general information only and is not to be relied upon as constituting legal or other professional advice. No endorsement of any third parties or their advice, opinions, information, products, or services is expressly given or implied by Royal Bank of Canada or any of its subsidiaries.